Good afternoon, everybody. It's John Seville here from Acorn Wealth. This is your executive summary for stock setups for Wednesday, the 13th of July. And of course, we just have 2 days left of the current open range until we reset again on the 15th, being options expiration Friday. Now, of course, the open range, which was negative for the 1st of July, seems to have failed at the time of recording this. Of course, anything can happen in 2 days, but this is kind of where we're sitting at the current time. So this would be one of the very few times I've seen open range fail. As it is currently. Again, anything can happen, but we did have strong volume here on Tuesday, which 4.11 billion over the 3.26 billion on Monday. So currently, it's looking like the market wants to push higher. Again, we're still looking at at favoring longs in the short term, while still holding small positions in various puts. Now, as I mentioned in trading room tonight, there are a lot of those trades have hit their stop loss levels. But as I explained in trading room tonight, I'm still holding a small position in most or many of those. Which basically, now a lot of those are October, November, sometimes some even January 2017 expiration. So the amount I have invested in those options is equivalent to what I would have as a stop loss on my positions. So I'll not be looking to exit those. I'm going to be holding those for the long term, given the high levels of volatility when they pull in the wrong direction. Those are again small positions, but if those do come back around into the entry zones, this is when we'll start to add to those positions as a more sizable potential trade. So, but in terms of any kind of relatively normal size of capital, those that I have pulled out of those positions until they get back into that ideal entry zone. So in terms of looking at the movements that we've seen some terrific performance on things like SGY. That rallied up. That's past its exit point now, but that was for anyone who was still watching that or trading that hit a high of $25 today, I believe. Yeah, 25.50. So again, you can see that kind of the way these things can just scoop up from what was this, a low of $3.20 to 25. I mean, there's some big performing stocks out there that are kind of marching to the beat of their own drum. OCUL also, this one hit its profit stop, so it stopped out with a 10-cent profit, but this still looks good. It's at its 9-day moving average, and if it breaks above the high of that candle, it should go again. So I'm still keeping my eye on OCUL. I do hold a handful of call options on this that. Again, I'm approaching with the same tactic, just a handful. I think only like $300 worth of calls or something like that. I've got an OCUL, which is just in case things like this can really shoot up to $6, $7, $8, $9, then that could be a very very valuable set of call options. We also saw some beautiful performance on SPAR, another one of our long hedges that we selected last week. That hit its target today, and but we're likely to continue to up to around 774. 774 area. In terms of looking at some new ones, again, we're kind of looking at the same type of strategy, these fallen angel type of trades. Now, JMEI was one that, again, on the hourly chart, that daily chart doesn't look that exciting, but when we zoom into the hourly basis, this is where it starts to look much more exciting. So you can see this downward channel that JMEI has been part of, and you can see that that's just starting to break out. So we've kind of got a move just pushing through in the last candle of today, with the volume picking up there. Directional movement indicators giving us a buy signal. Twigs money flows giving us a buy signal, and the MACD is positive. All things that we like to see in a momentum trade. And so I'm looking at this as a long from 420, the 420 area, up to 463, with a stop criteria at 407. And so this is one that I believe would be a decent long for tomorrow. I like this one a lot. FRGI, one that was, of course, from last week's alerts. FRGI is moving up steadily, and we can see this on the daily chart. Now, this was originally an original entry around 22.23, but this still looks good. And if this one breaks above 24.90, this could be a secondary entry, or so it's about 24.93. Could be a secondary entry point. I'll be looking at a target of 27.83 on this, with looking at the stop criteria at the 9-day exponential, which is currently at 23.32. Another one here, PFSW. Just starting to kind of round its corner as well. Again, like that nice little momentum kick, and this one's gonna probably struggle a little bit with this resistance here. We can see. I'd be looking at here as a break above 10.23 with a stop criteria at 9.47. So we're going to see it kind of hopefully push through this resistance first. That will at least give it the gap down support, and then I'll be looking at a target of 11.57. So again, let's gives us a nice run, and again we can just adjust the stop loss up behind this to protect that profit as hopefully it becomes created. Now, to go over to the kind of the speculative pharmaceutical space, I also mentioned that I bought some calls in DRRX. It was mentioned to me by one of our students, and I did like the chart. To say technically, now I'm not a fundamentalist when it comes to pharmaceuticals, but I really liked the way this was forming up. So I bought some $2.50 January 2017 calls. Okay, so as you can see, and that's just starting to break out of this consolidation. So again, speculative. These are kind of more speculative trades. So this one is one that I've taken a position in. SRPT also pending a large announcement, and I've got some call options on this. Again, you can see it's kind of building in this kind of momentum manner. Again, these are prone to big gap downs if FDA approval goes wrong, which is why I've got options instead of the stock. And this is another one that you could consider, looking at even like the $25 or $30 calls, even $35 calls. Looking at kind of long dated, looking towards the end of the year. This could be another viable play. But again, I'll be looking at long dated calls towards the end of the year or beginning of next year. Again, I'll be looking around that $30 strike price. Now, for some really speculative stuff, these are kind of some of the trades I really like to watch for day trades, and the likes of that. These are again very small stocks. INFI, Infinity Pharmaceuticals, huge gap down. It's been consolidating. You can see this one's got some just starting to kind of round out at the moment. The moving averages seem to have crossed. So we can see the high of this candle was 153, and it ran into that resistance level. Let's go down to, but now it's kind of just sitting on top of the moving average, which is now at 136, and stocks at 142, 9 days at 141. So we kind of have a cluster of support, 5-day moving average at 136. So we have a cluster of all this support. Have a look at this on the hourly chart. Okay, you can see once again we have the buy indication coming from the ADX, and it's just trying to round out at the moment. So again, this is much kind of a higher risk, obviously, trade, given that we are in a new chart. Let me just get this this fresh look to it. There, you can just kind of get the distortion out of the way. Just zoom in on that part of the chart. So you can see it wants to round. It had this big push up, consolidated. It's going to have some trouble with this level right here. Let's have a look to see if there's any relevance in the past. Yeah, so we can see that's kind of around the area that it struggled with previously. Was resistance there somewhat. And just looking at where this is going to, how this could be possibly moving, you can see it's downward consolidating at the moment. We're at 142 at the moment. I'd look to see this has a if this could have a break of 155, we could certainly get a big push. Or we can look at a. Let's just have a look. Yeah, if we can get a break of that 155 zone, that's kind of where I would be looking at it at. Obviously, you can always get in a little bit earlier if you're looking for a kind of an earlier entry point. We are supported by the moving averages at the moment. And for that type of an approach, I'd be looking at a stop criteria at 123 with an entry. And so 123. Let's look at where the 9-day moving average is at the moment. Yeah, 141. So an entry point at the current prices and a stop loss down at 123 would be the alternative way to play it. And again, if that goes, it's got a lot of gap fill to move purely on a technical basis. Next moving average not coming into place until 362. So we could get a rally up to say 343. So there's a lot of potential upside there of over 100%, but there would be about a 15-16% risk. So something that I would be putting less capital in, given that there is a much higher percentage of risk than in other normal trades where we're only risking 2 or 3 or 4%. So if it's going to be 3 or 4 times the risk, we're going to invest a third or a quarter of the money, so that the capital allocation is the same as with the other trades in terms of what we're risking on the table. And last but not least, STEM is also another kind of highly volatile trade for those of you looking for some of those much more volatile trades. Now, this stock has got a very thin volume, and then has gapped down and has collected millions of shares selling off kind of down here as the stock's consolidated around the bottom. We go to a 15-minute chart. Let's even go to an hourly chart, shall we? So you can see it's just completely flatlining here at the moment. Again, I would wait to see what happens if we get a break of that recent resistance. That's a high of 44 cents. Or the high here, 44 cents. Yeah, so if we break through 46 cents, that would be kind of my interest level there to possibly take a speculative trade on that. And the rally potential could be up to at least the high of 58. And so then I'd be putting a stop loss in behind the 9-hour exponential moving average, which will come in. There we go. Let's look at the 9 and 20. So you're going to see we'd basically be looking at an area around here. That would be the inflection point where the stock has turned. So I'd be looking at a breakout from 46 cents and a stop criteria at 38 cents. And that would be then something I would be looking to move up quickly as the stock potentially breaks out and continues beyond that point. And that would just be a first target. My way of approaching this trade would be to be continuing to move that up behind it to allow it to protect the entry point as soon as possible, and then see how we go about challenging the high back here, which is 73 cents. If we then break through 73, sky's the limit for how this could retrace. Now, not much fundamentally could change about this company. This could purely be a technical squeeze where there's that potential upside. So again, much higher risk. So those are a couple for those of you who have been asking me for more of those lower price stocks with the big potential movement for longs. There's two, INFI and STEM. For the more obviously sizable companies with a little less risk in terms of stop losses and so forth, we had JMEI, FRGI, PFSW, DRRX, and SRPT. So something for everyone, hopefully there. And of course, we're very excited to see how the market continues to unravel. And you'll hear it all first here from the Acorn team in the next executive summary. And we look forward to welcoming you all who are joining us tomorrow for our the first introduction lesson to the Fallen Angels Advanced Trading course. I'm super excited. Of course, this is where all of these stocks come from, is that scan. And looking forward to teaching those of you how to master it. There's still a few spots for those of you who are still in the registering process or considering it. So do make sure that you get in touch with us if you are still looking to enroll. And otherwise, we'll see you all then. Have a wonderful evening. Take care.